to you. Welcome to the show.
Oh, the pleasure's all mine. Thanks for having me.
Very gracious intro there. For more of an intro for yourself also, for those who don't quite know you yet, can you give a brief background of kind of some of your work history, where you've been in India so far?
Absolutely. So I'm Darshan, one of the co-founders of the Bank of Hodlers. Before we decided to start in the crypto lending space, I have a background in lending myself, where I worked for a private equity banking company called Piramal Capital, where we did asset-backed loans in the real estate space. And post which I looked at growth for a Series A funded startup out of Bangalore in India.
Yeah, awesome. And so got your start with some lending. Now you're kind of back into that space on the Bitcoin side. Can you kind of, I guess, intro Bank of Hodlers, talk about why you founded it, when you did, and kind of your entrance into Bitcoin?
Absolutely. So when I was at Piramal Capital, looking at facilitating loans with real estate, I always saw capital being an influencer of positive change. But the second we facilitated those lines of credit into residential real estate, I noticed that cost of capital was factoring in to be about a third of cost of housing. And at the time, this was 2016, the unaffordability of housing in tier one cities in India was only increasing. So I didn't think that's what capital was supposed to be doing in any market. It was supposed to be an enabler, not increasing the unaffordability of probably the biggest purchase of everybody's lives. So I decided to step away from finance, even though I worked for years at a stretch to get in. And I joined a startup where I looked at growth, all the while closely monitoring where disruption in finance and banking was really happening. That's when I discovered Bitcoin for the first time. This was late 2016. And when I was sitting out of India, I tried to bank with it because I was absolutely blown away by how genuinely different it is and how customer-centric the instrument is. So, and my God, was there a gap in terms of promise of what it could do and acceptance, especially in a country like India. That's when I decided that what Bitcoin stands for is too important for me to sit on the side of. And I decided to quit that startup and do a deep dive on where is it that I could play a small role in. And I did a deep dive on why most people use a bank today. And I realized that there are three primary things that a bank does for most people. One is safely store their capital. The next is make their capital easy and instantaneously usable. And the third is if the capital is not being used, it needs to grow in some shape or form. So storage, payments, and credit. Storage is done through your bank account. Payments is done through your wire transfers and your cards. And the system of credit on one side is a yield, and on the other side is done in the form of a dynamic line of credit in a credit card or your access to a loan in some shape or form. What crypto did on the protocol level itself was 1 and 2 in a decentralized way, which was phenomenal. And that's when I knew that there needed a system of credit to be built over this. And when we decided to start up, we had two options: either commit to a particular blockchain and be decentralized from day one, or be blockchain neutral, look at the market cap and serve each token in a very unbiased way, but the trade-off would be decentralizing over time. And the finance person in me could not leave the opportunity of Bitcoin off it. So I don't think the wrapping and its equivalent solution did justice to it. So that's why we decided to be a custodian, and we're closely looking at how to decentralize over time. But at the moment, we're a custodian, and yeah, that's worked out pretty well. Our mid to long-term goal has been enabling retail banking with crypto at the center. And the reason why we're keeping crypto at the center is we want to build the best bank that's ever existed. And I think Bitcoin's the best instrument that's ever existed to facilitate banking. And that's why crypto is at the center of everything.
So when you're starting, so first it's interesting that you're working in finance and kind of knew you wanted to do kind of something in the startup side of things, and joined a successful startup to kind of get your feet wet, learn kind of from the inside, and then found Bitcoin and jumped into it full time. I guess talk a little bit about your structure in the first place, kind of the business model that you came out with first, and then kind of start to go into how it's developed over the last couple of years?
Yeah. So the clarity around starting up was not a function of external forces at all. It was very introspective in the sense that I knew I wanted to create positive impact in the banking space, because I think banking and the way it's approached by the incumbents is very zero-sum in nature. I didn't like that. I saw that in the absolute elite version of capital allocation, and I knew the broader and more mass market I looked at the instruments and the companies, the worse it was getting. There's a significant misalignment of incentives. And I think given that the opportunity of finance doing finance right is positive sum. I don't believe it's zero sum. Um, and we try to approach banking with that perspective. So it was very introspective on, okay, if we are to redesign banking with the internet agent, with knowing that we can be truly customer-centric and decentralized from the get-go, what would that look like? And that's when we ended up at building the system of credit. And we didn't really think about regulations at the beginning, because when I decided to start, there was absolutely no clarity on a regulatory standpoint. This was 2016, 2017, so it was the ultra hype cycle that was going on. People were doing ICOs left, right, and center. The reason why we didn't do a token sale is because we knew in looking back that the second we had a token, it would interfere with the experience of the product. And that was something that we didn't want to compromise with at all. Because if I hold Bitcoin, for example, I only want to get my yield in Bitcoin. Why would I want to get my yield in an ICO token or anything else? And that's what we're about. We enable the highest possible yield in the same kind. So that's just a little bit of perspective. But coming back to your earlier question around regulation, regulation tends to trail innovation. We've seen that with the ride-hailing businesses across different jurisdictions. We saw that with multiple startups in Silicon Valley and even in India for that matter. And we knew as long as we were doing right by the consumer, we kept them at the center of everything. Regulatory clarity would come eventually. And the intent is for us to make sure that we are in this for the long haul. So whenever there is regulatory clarity, we would register. But we decided to start up when India closed down as a market opportunity. There was the banking ban from the Reserve Bank of India, which is the equivalent of the Federal Reserve. So when we looked at structuring our company, we did a deep dive on what are the more progressive banking jurisdictions, and we narrowed it down to Singapore.
Oh, interesting. Okay. So we kind of take us through kind of that entity structure then, and your customers that you serve now. Is it kind of, who's your customer base? Is it in India? And this is kind of a workaround as from an entity structure. And then there's also kind of a peer-to-peer aspect that makes it, made it kind of tenable within India for the last couple of years before some of the recent changes.
So from the very beginning, we knew we were going to be a global company. So we structured it such that as long as we're looking at KYC and AML, we could onboard users irrespective of the jurisdiction they were from.
Gotcha.
So at the moment, our distribution is about 30% from the EEA, 20% from the US, and the rest from Southeast Asia. India as an opportunity only really opened up for us since the banking ban was reversed by the judicial system in India. So that was in March 2020. And it was a very positive upside for us. We didn't think that was going to happen. And as long as there's regulatory clarity and the consumers value the underlying instrument, I think we're in a business that's going to thrive. But I have to say that I'm not sure on how things are going to pan out over the next 9 months or so. I'm personally excited about the opportunity, given where we are as an economy, how the local currency is weakening. It's inflated in the range of about 15% in the last 12 months. But the regulator is pretty closed down. It's not as open a banking nation as you would put Singapore or the UK or the US for that matter. So I guess we'll have to wait and see how this pans out from that standpoint, but we've approached this from a global perspective from day one.
Got it. Out of Singapore. Before we get more to the business and kind of the the region specific stuff that you deal with in Southeast Asia and Europe and the US, on the India side, 15% over the last 12 months is pretty significant. What's kind of the mood around that in India? Is there a flight to, is that one of the reasons that kind of some of this financing around real estate is the way it is? Is there a flight to safety on the real estate side? India has kind of a interesting relationship with gold over the long term. Can you dive into that a little bit?
So India is a very saving first economy. We have grown up traditionally with a very low average income versus the West. So whatever wealth, the majority of the wealth we end up making, we save it in some shape or form. If you look at the mental construct around owning a house, it's very socially supported. So a lot of people buy. That's the biggest purchase most people make, and it's a significant status symbol in India. Additionally, gold is probably, I think, outside of the Federal Reserve, I think India as an economy is the largest purchaser of gold anywhere in the world, and that's because we have that saving mentality again. And the way we look at, if we look at the finance industry, getting exposure and hedging against INR is directly pretty difficult because of the restrictions around capital movement. But traditionally, the US dollar has always been pegged against gold, and there have never been caps for Indians to purchase gold, both in terms of cash and in terms of wire transfers. So that how the people in India look at hedging against the inflation, the inflation of the currency is typically by getting exposure in gold. And that's how we get indirect exposure to the dollar as well. And I would say over the last maybe 2 years or so, real estate has not proven to be the most prudent investment, especially post-COVID, right? I mean, Tier 1 cities, people are migrating out of there. Vacancies have gone up both on the commercial and residential side. And gold is at its all-time high. It always trades at a premium in India as well. So both the educated and I would say conservative investor in India treats investment in gold as one of the most safest, I would say, asset classes to get exposure in. And that's why I believe if, let's say, the regulatory uncertainty actually ends up ironing out, Bitcoin is going to be a very attractive opportunity for the 1.4 billion people in India.
And then, so that all, thanks for kind of laying all that out. And then the retail banking experience. What is it? What's kind of the infrastructure like for, I guess, just first from a retail banking perspective, and then from the perspective of like a startup founder, the infrastructure of raising money and kind of financing, whether that's VC or traditional loans. What does that look like?
So retail banking in India, given that we are a very engineering enabled country, has been pretty tech friendly. But from a broader health standpoint, I mean, a bank is really, the success of a bank is a function of what's the ratio of their non-performing assets, irrespective of how big their loan book is, because that's their bread and butter. And in the last 12 months, 2 major banks in India have failed. And the way banking all over the world, not only in India, has been, is the upside of banking has been privatized and the downside has been socialized. We saw this in the last 12 months as well, where the Yes Bank, which was the 4th largest bank in India, was actually bought out because of the significant defaults that they had, and they couldn't maintain the capital reserve. So the government actually came in, forced a buyout, and in that month, I think the Indian rupee inflated by about 7%. So
wow, interesting.
It's very unfortunate that we look at it this way. But just from a tech standpoint, it's pretty friendly. Payments are instant or close to instant. It's not like your wire transfer or ACH where it takes a while. 30 minutes or under, irrespective of without any caps. The fees per transaction are in the range of about either free or up to 8 cents per transaction. So it's very cheap to move money locally. It's extremely difficult to move money out. And from a funding perspective, given the costs associated with getting companies out of the ground in India, their engineers tend to be about 3 to 5 times cheaper than the West. I would say if you were a traditional fintech, your odds of getting funded are extremely high because people understand money here, and which also meant there were B-class entrepreneurs getting funded. But if you were a crypto company sitting out of India, my God, was it an uphill battle for anybody. And that's why if you look at the best crypto companies, even in India right now, are serving the Indian market, they have raised from either the US or Singapore.
Yeah, there has been kind of an uptick, it seems like, in the last 4 months or so of funding going into India. So it's becoming a hotter market. Yeah, that's interesting. You know, and Yes Bank was kind of wild to see from the outside, because they probably did, you know, I guess they're a newer bank, and they probably did the most kind of, you know, marketing themselves outside of India, even as kind of this, you know, new form of bank, you know, tech focused. And so, you know, would see those guys around kind of Southeast Asia and places. And it was kind of surprising to see it blow up the way it did. And 7%, you know, and you know, inflation is kind of the definition there of socializing the losses. I mean, that's pretty wild to see right off the bat. And so for y'all, so, you know, you mentioned kind of the aspect of, you know, engineers in India, maybe a little bit cheaper than out in the West. How did you think about the structure of the team? You set up an entity in Singapore. What's the makeup of the team look like in geography, and I guess kind of what you've set up there?
So the team is pretty small right now. We are 7 people in total, 6 in product, and I handle everything else, including customer support. So if you come to the platform and there's anything, we have a one-click support. If you've deposited over $100, you get a direct line where you, in a click of a button, there's a 2-way outgoing call, and the other call, the other side of the phone is going to be me helping you through whatever it is that you typically would require support for. And yeah, we're 7 of us. All the 6 who are in product sit out of Bangalore. I tend to shuttle between Singapore and Bangalore. And since COVID, I've been in India. But the mid to long term intent is for me to permanently be out of Singapore. That's going to happen very soon.
Take us through kind of the current state of the business, product offerings. What are you doing now, and what do you see for the rest of this year?
Yeah. So I think, okay, what we do now is pretty simple. If you are used to working with a crypto wallet, we have an automatic yield generating crypto wallet. So instead of you keeping your funds in, I mean, you are taking a trade-off of custody wallet versus a non-custody wallet, full disclosure. But for that risk, instead of it sitting in an exchange, what you can do here is get paid out at noon UTC every Monday, and your funds get compounded on one side. So it's aggregation of retail liquidity from a business standpoint, and from a user's or a retail user standpoint, it is a wallet that pays you a phenomenal yield in the token that you've actually deposited. No nonsense, no disruption, whatever that is. And on the other side, we generate that yield by working closely with custodians and institutional folks who are looking to take positions in the market, and they pay a slightly higher yield. We keep we have a net interest margin that we maintain, and yeah, that's where the business is right now. Our goal, we see if there are funds kept in a hot wallet or a custodian wallet, we think it's eventually going to end up in some system of credit, and the yield is going to be a feature. It's not going to be something people use a standalone platform for. Because if you are taking counterparty risk, you need to be compensated for that risk. And that compensation is going to come in the form of a yield. And like, if I were to close my eyes and say, what's the ideal crypto platform? It is one that pays me irrespective of what I do, given that I'm keeping it in a hot wallet, and I have the capability to trade with it with the deepest liquidity. And if let's say there is a counterparty who doesn't accept Bitcoin for whatever reason, Bitcoin does have a dependency of network effects, right? I should be able to make that transaction if I want to bank with it. So that's the experience we're going for. And I'm very happy to tell you that we have a release coming up very soon where we have a unified wallet that pays you the highest yield in the market, irrespective of what token and what is it that you do, with the ability to trade with Binance's liquidity at absolutely no management. So in one click, you can enter the pro trading experience and you can take positions. And you don't have to pick and choose, okay, 30% of my allocation in a lending platform, 20% in a highly liquid exchange so that I can take positions in the market. It's no compromise. But what we're trying to achieve here is issue a bank account, issue a card, try to make payments with the underlying seamless, which means integrating with closed network distribution products such as Visa, MasterCard, Venmo possibly in the US, Paytm in India, Carousel or Gojek in Southeast Asia, which means, and that experience would look like, I bank with Bitcoin, maybe you don't accept it for whatever reason, you probably don't know about it. I capture your Venmo handle, I make a $100 payment, it's settled with me in Bitcoin, and you receive $100 seamlessly. You don't know that I paid with Bitcoin, and flip the equation on the other side, you pay me $100 and I just receive it in Bitcoin. So building in that kind of an experience is what we're going to do to solve for payments, and issuing an account to ensure that your Bank of Hodlers account can become your primary banking option. So making crypto spendable, both in terms of sending it and receiving it. And think of what Revolut did in the UK, where fiat is at the center and there happens to be a Bitcoin wallet on the side. Flip that equation around. So crypto is going to be at the center, and you can have a fiat wallet, a fiat bank account on the side if in case if you want to receive your salary or you want to make a payment on that front. So that's what we're going to build over the span of 5 years across multiple jurisdictions.
Okay, very interesting. And I guess you mentioned the kind of Binance partnership there, which is interesting. How are you thinking about kind of your partnership strategy and any other kind of integrations that you have that are worth kind of mentioning?
So we have a bunch of people who are using our APIs right now. I should be able to declare that pretty soon, but I would just give me a little time. Maybe I can get back to you on that. Yeah. But the way we look at the integrations are very focused on how is it going to add up to delighting every user on our platform. And if it enables something on the platform, that's when we take it forward, because that's what we're about. We're about delighting the users who end up signing up on our platform. So if that means integrating with the deepest liquidity pool to take a position in the market, we're gonna look at it very agnostically and pick partners who have the deepest liquidity pool, both from a crypto to crypto and a crypto to fiat standpoint. We're never going to be an order book company, because I believe that problem is solved for. We're possibly going to route these transactions to there. And
sorry, you'll never be a what company?
We're not going to be building our own order book. We're not going to be an exchange. Gotcha. Yeah. So we'll complement what exchanges have to offer across jurisdictions. And I think given that we would be routing orders to them, we are a valuable partner to them. And we could possibly look at enabling a system of credit within their products as well, which increases our liquidity.
And then on the fundraising side, are y'all bootstrapped? Have you raised outside funding?
Yeah, we've raised a seed round of about $500,000 till date. We raised this mid last year. We're smack in the middle of a round right now. I hope we're going to be making an announcement very soon. And I have to say that these are capital that we're raising from right now is from extremely good crypto investors. So we're very excited about who we're going to be working with very closely moving forward.
Very cool. I would guess you might have some exchanges in there. You're talking about big names. Well, looking forward to that update when it comes. And then, I mean, on that fundraising side, you've raised case so far in a seed round. You've kind of demonstrated this growth over multiple years. When you look at the fundraising that some of kind of the companies in your sort of sector, the BlockFis, the Matrix Ports of the world, some of their fundraisers would imagine that would be interesting to see what y'all kind of come out with. How do you kind of think about that landscape of your kind of competition and where it's headed or trends there?
So I think there are a couple of companies that have done a phenomenal job in validating the need and the market. I believe that it's only day one for the market. I don't think, I think there's a significant upside opportunity both from a product and a business opportunity standpoint. And I think we're at 2013, 2014 equivalent of what we would see in the exchange days. That's where we are in the C5 space especially. So the upside opportunity is huge. And given that we are a tech first company that happens to understand finance versus some of the other companies that I think are finance first companies that happen to be dabbling in tech, I like our position. I think if we look at what is it that consumers value, they want a robust product, they want phenomenal customer support, and they want counterparties that care, that keep them at the center of everything. And that's what we stand for. So I'm not too worried, let's say if somebody has 100 times the kind of capital that we do, because I look at our metrics internally every day. I look at the fundamentals of the business. I look at the feedback we receive from consumers who have tried who've gone around and tried multiple products, and I can sleep very well at night.
All right, confident answer. The kind of the nature of y'all's growth geographically and how you're thinking about that. So, you're based out of India. You have a large portion of your customer base in Southeast Asia, in Europe, in the US. Can you talk a little bit about the differences you see in consumer behavior in those areas, and maybe kind of, I guess, how you're thinking about kind of the growth of your customers in different regions? Do you see it as kind of a one thing, or do you segment it out like that in terms of what do these customers in Malaysia want versus Germany and that type of thing?
So behavior is most definitely not the same from if we look at the way people work with in different pockets of Southeast Asia versus the West. People are not as trading focused. Surprisingly, at least the people who come to our platform, they are fund managers. They are people who are looking to stay risk off on their local currency. They're looking at an uncorrelated asset class, and they're looking at the best possible financial outcome for their portfolio. And I think if you have exposure in crypto, it makes and you understand that there are risks to self-custody, and there are risks to trusting a counterparty with this as well. If you can figure the balance for which that works for you, we drive people's financial incentive very well. And what we're about is ensuring that if somebody decides to bank with crypto, it pans out to be the best financial decision they've ever made. It pans out to be something that guides them as frequently as possible. And I think if we can achieve that, we're achieving that with the limited user base that we have, given that we are still pretty small, both from a team standpoint and our user base. We're able to manage that pretty well.
Can you give me more, it's okay if you can, but can you give me more detail about the size of your user base, deposits, maybe like sizing of most of your customers? Can you share any more detail on those things now?
Yeah, we have about 70,000 signed up users. We have an average deposit value of if a user has deposited over time. Okay, maybe talking about these numbers is a little too early, but what I can share is our 1-year retention rate is in the range of about 67%, which is if somebody tries our platform today, ends up depositing some capital, there's a 70% chance that they use us at the end of 1 year. Additionally, if what we've also seen is we have a negative churn in terms of capital brought in. So people try our platform with $100 or a couple $100, and over the span of 6 months, they increase their exposure to the platform significantly because of their experience. They see that they get paid out very regularly. And so the average deposit value per deposited user tends to transition from about a couple $100 to, I think the average at the moment is in the range of about $6,500 per deposited user.
Interesting.
But I think it's a little early for us to talk absolute numbers. I hope that's fine.
Sure. And then is the size of kind of those customers, between the West and Southeast Asia, is there a difference there? Like if it's, ends up being $6,000 and, X country, you're seeing, being smaller amounts in other countries, or is it pretty across the board similar?
So I think it's pretty proportional to average household income. So if a country like India has a lower household income, you'll also find that the average deposit value won't be in the range of about 6,000, but it would be in the range of maybe 2,500 to 3,000. It's directly proportional to the average household income.
Yeah, interesting. And then what does your marketing look like? So you're growing kind of across the world. I think most of the companies that have kind of targeted your use case are like, hey, we're going to do the US first, or we're going to do these, we're going to do the UK first, or whatever it is. That's a pretty big task to say, hey, we're going to be a global company from day one. What is the marketing how are you thinking about marketing and entering these different countries?
So we look at growth as a function of a very high rate of retention plus a virality rate of some shape and form. So, and we achieve the virality rate by delighting consumers. We haven't spent a single dollar on marketing since our launch.
Interesting.
And what we've seen is if we can do right by the consumer, they tend to talk about our product quite a bit. And and the crypto community is pretty close knit, right? I mean, if you find a product that you absolutely love, it's very likely that you would tell a friend of yours about the platform and possibly get their feedback on it, see whether you're taking a risk that you would have otherwise not scoped out and the like. So organic discovery has been something that's been working exceptionally well. We tried a referral product. We tried a bunch of things. It was very, very insignificant to the word of mouth growth that we actually that we got, and the primary focus has been speaking to the consumers very closely and ensuring that they're happy. If they're not, speak to them. I get on calls and do right by them. That's and if we can consistently do this over 2 years, which is what we're doing, I think. And with very limited capital, I see only us moving only in one direction.
All right. And you're kind of the multi-tool player over there, doing a lot of that yourself, which I'm sure you're ready to build that team up. Is the kind of once you kind of announce and close this round, how are you thinking about the growth of your team, and kind of what does that enable you to do? What are you excited about for that?
So, coming back to the two equations that work for us, we've spotted gaps and opportunities for what we need to do to get to where we want to be 1 year from now, both from a traction and a product standpoint. And we see the bar. So every dollar that we end up raising is going to go into improving the experience in some shape or form. That directly translates to product being better. So we're going to be hiring for technology. That we don't believe we need to be spending capital on branding. We believe word of mouth is far most powerful than any banner ad on any popular platform. And the next thing that we can do to delight and create value for the consumer is operate with the banking networks in the jurisdictions that we're seeing traction. To do that may require local licensing, which is where a significant portion of our capital is going to go into as well. So this is going to amount to at least 80% of our current round.
Got it. Makes sense. And it always makes you cringe a little bit to see a lot of going to the lawyers and the regulatory side of things, but definitely necessary to lay that foundation in the right way. I mean, this is all interesting. I didn't know a ton about y'all before talking to you, so I'm learning a lot here.
I urge you to try the platform. You're going to be positively surprised. If you've tried the competition, I guarantee you're going to be positively surprised.
I like it. What are y'all returning on for BTC right now?
7.23%.
7.23. That would be the best out there. Is there a min max? Is there a max, I guess, for that?
No.
No max. Really? Okay. Cool. So and then you have these APIs that are already kind of syncing up with different exchanges and other platforms. Can you talk a little bit more about you kind of mentioned it, the payment side. So the three parts of what you see as banking and how you're kind of implementing some of these things. You have the custody side. I saw, by the way, that you may have a partnership with BitGo on the custody side. Is that the case?
Yeah.
Cool. And then the kind of lending financing side. On the payment side again, I mean, that's a pretty intricate thing to be working on in a lot of these different markets. I guess that's part of the kind of regulatory stuff that you're going to be looking at. How do you think about kind of go into a little more detail about how you think the future of payments in crypto looks? And I appreciate your perspective of first kind of saying, hey, from the outset, there's the risk reward of a third party custodying your Bitcoin and being transparent about that. I think a lot of companies kind of in y'all's shoes sugarcoat that side of it a little bit. And you seem kind of ideologically, you think about Bitcoin, you think about it kind of from a Bitcoin first perspective, which is refreshing. And I think that's probably kind of how you got into this in the first place is kind of more on the ideological side, which is I think a good sign of kind of long-term staying power and working through kind of some of these cycles. How do you look at the kind of future of Bitcoin crypto payments, and do you see kind of traction on that anywhere in particular? Kind of regionally, what are you seeing there?
So I think the biggest barrier around payments with cryptos is not scalability of the underlying blockchains, primarily because I think some of the best minds are working on this. We're going to find very solid and innovative solutions far quicker than we currently give credit for. So I don't think that's the biggest bottleneck for payments. I think the bigger bottleneck is around complexities with it being legal tender across different jurisdictions. So most countries may regulate it as an alternate asset or a commodity. And the fact is, if there is a difference in the purchase and settlement price, you are incurring a capital gains liability on that. And that worries me more than technology scalability. And the way we see to solve that is if we just do this in a credit first manner where settlement happens later and it's done in the form of a line of credit, you mitigate that. That's why we started with the first a static loan against, let's say, a crypto holding. And then over time, when we enable payments, it's going to be payments in the form of a line of credit and possibly settlement post that. And that is also very tax favorable. And of course, this is very challenging to do from a compliance standpoint, which is why there's such a significant portion of our fund is going to be devoted to that. And I think if we can do this with very deep relationships with the regulators and the banking infrastructure across the world, for the people who care about crypto, it's going to be phenomenal. Now, expecting everybody to care about crypto, care about custody, managing their private key and the like, I think is unrealistic. I think where crypto adoption is, it's still at the entrepreneur / extreme early adopter stage. You're not going to see, I don't even think we're still at the early majority stage. So it needs to get a far more seamless from a payment standpoint for this to be truly an instrument that ends up capturing some part of the market, some part of the settlement market. And that's going to happen, in my perspective. Sure, you have to be legally compliant. That's how you're going to do this. And it has to also be significantly interoperable. It cannot have the network effect dependencies that we have today. So, for example, if you and I both don't have a Bitcoin wallet, settlement with Bitcoin is quite challenging. Assuming, let's say, we're trying to bank, given that I sit out of India and you sit out of the US. Breaking that dependency is going to drive payments. And if the way we're looking at breaking that is integrating with existing networks of distribution. It's all about networks of distribution at the end. Venmo has a phenomenal network effect product. So does Cash App. Paytm has that in India. And there are different, WeChat and Alipay have that in China and Hong Kong. So for the people who care about banking with crypto, working backwards to delight that user, making payments into these interoperable networks not only easy, but far easier than, let's say, settling with your bank account, is what is going to drive payments with these instruments. If it's not raising the bar from a UX standpoint, more often than not, people are going to settle for the easier option. And that's the opportunity that I see us capturing, where we're going to make it extremely easy to bank with Bitcoin. It's far better than how you would have done it with a bank account. So that's what we're going to do.
All right. Very, very interesting way of thinking about it and framing it. I think it makes a lot of sense. Back to kind of bigger picture. You've touched on kind of points of this throughout the talk, but maybe kind of to just kind of sync it all together at the end here. Kind of your vision of kind of a full suite financial services company, or whatever you see Bank of Hodlers being in 5 years. What's kind of your 5-year vision, I guess, for where this goes?
We're going to be the most customer-centric bank that's ever existed. And working backwards from that vision, we believe crypto is going to be at the front and center of that, because it's the most customer-centric instrument that's ever existed. Integrations with banking networks need to happen. Us as the custodian and counterparty to making this seamless requires us to own banking licenses across different jurisdictions. So I hope in about 5 years' time, we're going to be a licensed bank in the jurisdiction that we're bullish about, which is Singapore, one jurisdiction in the EU, and possibly the US as well. So we're going to be vying for that national charter in these jurisdictions.
All right, love it. What's you said one jurisdiction in the EU? What does that mean exactly?
So the passporting capability of the EU is such that if you have a banking license in one jurisdiction, you have the capability to service the entire market. And
is the ease of doing that different in different countries, actually, even though it's a blanket kind of blanket access?
Absolutely.
Is there a difference in terms of, hey, it's easier to do this in Italy than Germany, things like that?
Yeah. So there are jurisdictions, primarily smaller economy jurisdictions, that have it easier. But I don't think the easy way is the right way. I think working with the most reputable regulators is what's going to make us valuable over a 10-year horizon. So we're possibly going to be registering. We're not going to work backwards from which jurisdiction is easy to work with, but rather which is the best banking jurisdiction. Is that the UK? If that is the UK, then we're possibly going to register out of that. Is that BaFin in Germany? If that is, we're going to register out of that. We're not working backwards from which is easier. If we were, we would be sitting out of one of the much smaller jurisdictions, owning a crypto custody license, because it costs close to nothing to get that. And I don't think that's defensible over a 10 or 15-year horizon. I think doing it right with the regulators, keeping customer centricity at the front of everything and creating customer delight is what's going to make us valuable over a 10 or 15-year horizon.
Customer delight. It's a good tagline. And then what is getting that license in Singapore give you in terms of access to Southeast Asia? Is it Is there any kind of blanket benefit there?
Oh yeah, so we can do exactly what we want to do for the world, which is we can issue accounts, we can do international remittances, both with crypto and fiat. We can be our own custodian if we like. We can do a bunch of things. We can issue our own card, directly work with a distribution network like Visa or MasterCard. So we're going for the whole suite. Just one category below a banking license. We're applying for everything else.
Got it. Very interesting. You got your hands full. Work it out. And then actual last question, a recommendation. So it can be Singapore, I spent some time there, Bangalore, where most of your team is, or where your family currently is now in COVID-19 times. One recommendation can be a place to eat, thing to see, book to read. Leave the listeners with a recommendation.
I think there's this exceptional book by Ben Horowitz called The Hard Thing About Hard Things. And it talks about, and this is very relevant for someone who's starting an entrepreneur's journey, to do right, to not take short-term trade-offs. Short-term trade-offs may be easy to do, and doing the hard thing can be not beneficial at all for the short term. It could be extremely inconvenient, but these things really add up. And you are at the end, you are your reputation. You are what you stand for. And if you do this with a significant amount of integrity, people can see that, and that's infectious. You attract the best people around you. You associate with the best investors. You get the highest quality users. You get these things compound, and it's extremely well explained on how to build a company the right way in that book.
Yeah, that's a great book. It's really kind of shows the it's in the title, the struggles associated with that commitment to integrity and doing things the right way too. All right, man. Great to talk to you. Thanks for your time. And we'll need to check in again once you've kind of closed some of these things that you've hinted at.
Absolutely. Thanks so much for taking the time.
Thank you.